May 29, 2014, current time 10:30 GMT. Jay Meisler here with the Daily Forex Trading Outlook. Well, we have Ascension Day in Europe, so it's very thin. Tomorrow's a Friday and month end. Sorry, again, very thin. As pointed out yesterday, flows would be more, and price action would be more driven by month end than anything else, and we saw sterling come under pressure yesterday, and we'll find out over the next couple of days whether that has to do more with month end than any fundamental shift. If you look at what's going on, you had the Aussie spike higher on capital investment data. Dollar yen come down to test the 101.50 level just below it. Euro dollar come off its low after making a new low by about 1 pip at 136.86. And sterling showing a modest bounce from yesterday's brief test below 167. This is where we stand coming into today. The key highlight is going to be the U.S. Revised GDP, preliminary GDP, supposed to be revised down. Estimates around minus 0.5%. Typically, this should be ignored. If the market reacts to it, it offers an opportunity probably to fade it because we know the second quarter is starting out on a stronger. It's been, not starting out. It's been on a better note, and as it catches up from the bad weather of the first quarter. So that would be the if the market plays stupid, then we have probably an opportunity to fade any move on that. If not, no reaction would be the more logical way to trade, more logical move in the market. Now we have. We'll go through the charts in 1 second. One thing to watch is the bond market. If the dollar were to come lower, it could easily play on falling yields, although yields are falling everywhere. It's a total head scratcher. You must be a lot of bond traders with holes in their scalp from scratching so hard they can't figure out what's going on. With all that said, let's look quickly at the euro dollar key level on the upside. We're going to go now to the let's go to with the 4-hour chart, which shows this week's high at 136.68 is the key level. But if you look at the 1 hour, and we can do something here just to highlight what the key levels are, and I'm pointing them out because see what levels would turn the market today. If not, because the market wants to stay short into next week with the ECB. This here was a phantom spike high yesterday on the 1 hour at 136.28. that followed a test of almost at 136. So that would be your first level. It's not that important, but it was the level that set up this low here, and then just watch out. More important is right here, which is 136. Let's say 38 to 40, really 40 or so. Because you can see the resistance up here, and that's set up to move down yesterday. And right above it is 136.44, which is a 200-day moving average. So that whole area, that 136.40 to 44, 38 to 44, should be a very tough area. Bears did not want to see a close above 136.44. Otherwise, 136.57 and 136.68 on top. Downside's obvious. Right here at 136.86, but the key level, as I've been pointing out, 35.86, pointing out for a long time, is 135.59 to 62. But may have to wait for next week to see if that gets tested. And currently, 136.20, one of my magic levels, seems to be acting as resistance. But I said 136.28, 136.38 to 44 are the key things. So next focus is on GDP. I told you what I think about that, and that's it for now. And it's going to be a thin Thursday and also a thin Friday. So just be aware of month end. One word about month end, by the way. Often when the U.S. stock market does well, it leads to some rebalancing against the dollar as FX hedges get adjusted. Although stock markets have been up just about everywhere. So often I know against dollar Canada, that's one thing that happens. But that's nothing I like to speculate about because I can't trade off that stuff. But just be aware that Friday is often, and month end is often dominated by rebalancing of books and hedges and so forth. And that comes around the fixing time. So You'll get a better feel for the market after the fixing than before, um, which is probably after 4 o'clock London time, although there are various fixes. So just keep that in mind. If you question what a fix is, just let me know. Um, Otherwise, right here, and I think I read this article about don't leave yourself at the mercy of the market. Today is a prime example of why you should put time into your trading toolbox, and one of the factors you should look at. So I strongly suggest clicking on this article here. Go read it. I think you'll find it very useful. And Thursday is one of the days you have to be careful not to put yourself in the being at the mercy of the market. So click on this link. We'll touch base again probably over the weekend or on Monday.